And what we're going to talk about is assets and down payments. So the bank wants to know how much money you have saved up. Obviously, that can be in savings and checking accounts, CDs, investment accounts, anything that's liquid, including IRA, 403b, 401k, etc., or and including gift funds, but gift funds have to be from family members. So the biggest things when it comes to assets and down payment is we have to verify every dollar that you have in the bank. And we have to make sure we document how that money got into your account. So it's just money that came from normal savings and normal payroll checks. That's easy. If you have random deposits or random gifts from family members, that's when it gets a little more creative, and make sure that you always paper trail every dollar that goes into your accounts, because that's what lenders look for. And they want all the paperwork to know where the money came from for the down payment. So that's just the asset part. Next part is going to be, so you have two parts when you have funds to close. You have the down payment and you have closing costs and prepaids. Closing costs tend to be the cost of getting a mortgage. That tends to be appraisal, title and escrow, tax service fee, underwriting and processing, and any points that may be associated with a loan. So normal third-party and closing costs tend to be about $2,000 to $2,500, and then if you pay any points, a point represents 1 percentage point of the loan amount as an extra fee, and that extra fee is really entailed to get a lower interest rate. Okay, so that's just the closing cost side of things. The other out-of-pocket is going to be prepaids. That's prepaid taxes and insurance. So usually we collect 3 to 6 months of taxes and insurance in advance when you close on a home, and you always pay 1 year of insurance in advance. And the last prepaid item is prepaid interest. So for example, if you closed on May 15th, we would collect interest at the end of May. Then that would be funds to close. Then you would not have a payment on June 1st. Your first actual house payment would be July 1st. So again, funds to close are down payment, closing costs, and prepaids. The down payment is going to be a minimum. Where we can get creative is getting creative on maybe having the seller credit you some costs for closing costs and prepaids to limit the amount of money you're bringing to close.